Good afternoon, George Cavaligos for HFT Bonds. Last night was the trade again, and unfortunately I wasn't home in time to play the big sell-off. I got it right on the opening. The market broke hard last night. I guess there were some comments out of Japan. A lot of crazy talk coming out of Japan these days, so you got to keep an eye on that stuff. It didn't come up on any of the news wires until much later. They like to keep that stuff to themselves too, so be careful. Woke up this morning and we were trading well bid. Some weak economic data out of, China, and some weak economic data out of the UK. A lot weaker than expected data there out of the UK. Stocks had come off a little bit and we were trading a lot higher. And we had, I think, one chance to break. I tried to put a small short on early after the buyback this morning. We never broke, and that was it. The rest of the day we just sat up near the highs. I think I could have squeezed if I would have been sharp enough. I've been trying to scalp around up here a little bit and make a few ticks on this thing, but the range in the afternoon has been 15 to 17 plus in the 10-year, and it's been 17 to 22 in the bonds. It's not a lot of fat on that bone. So we'll have to keep an eye on it tonight. Unfortunately, I have a business meeting tonight, so I won't be in early. I don't think it's going to be as fired up crazy as tonight because we're seeing a lot of reversal type things going on in the markets. The yen was a lot lower last night, made new lows for this whole down move. And then when I got up this morning, it was actually higher on the day. And let's see, right now it looks like it's closing right around what would be, if it closes a couple ticks higher from here, it's a key reversal, and if it closes a couple ticks lower from here, it's a minor bullish reversal. Either way, it's setting up for some type of a corrective move. You know, we see equities up, I think 7 of the last 8 days, the yen down 7 of the last 8 days, whatever. I'm making these numbers up, but you get my point. And now we're getting some corrective activity. I had thought that this would not happen early in the week. I thought this was going to happen later in the week as we came out of the 30-year auction and as we come out of the triple witch in the equities markets later this week. That would have been the perfect scenario, and of course we know we don't live in a perfect world. So the markets started their correction today on Tuesday. We'll see if we get any follow through tomorrow. I imagine we will see a little bit of follow through tonight. Towards the upside in the treasuries. I'm not looking for a lot. The high in the 10-year is what, 18 plus. I think we could see 21 plus and maybe as much as 24 plus. I would be very surprised to see 24 plus before tomorrow's buyback, but it's possible. Market isn't backing up much at all. So we got some shorts caught. Equities are still flirting around near their lows. And we could be in for a little bit of couple days, 3-4 days of corrective activity in the markets here. The fib retracements obviously are the key on the upside in the treasuries. You know, that 24 plus is the first fib retracement in the 10-year note. 142.03 is the first fib retracement in the bonds. That might be a bridge too far right now for us to reach that level, but we could see that going in tomorrow's auction. I get incredibly nervous when the market rallies into these 10-year and 30-year auctions. You know, the seasonals are poor for this refunding, but again, the market held the lows last night, and I'm labeling that as a B wave, but I'm nervous about that count because the C wave's gone a little bit too far here. 141.23 was a 1.27 fib extension, so that's still within the realm in the bonds, but the notes have gone a little bit too far. Then again, you know, we've been talking about that over the last couple weeks, how the 10-year note goes further through these objectives on the upside lately, and the bonds are falling short of meeting objectives on the upside consistently. The bonds did take out their C equals A target this morning. That was kind of the trade that I was leaning on, the short initially. We took that out, and now we went to the 1.27, which is like the next big popular Fibonacci extension target for corrective C waves. Much beyond 1.27, and you're talking a little bit more of a bigger corrective phase than just the ABC off the low, boom, done. You know. What else? That's about it. Have a great night. Look for a little bit further upside here. Make sure you have good stops on this thing. Like I said, rallying into these auctions, I think you're okay overnight. I would be very cautious being long into the 10-year auction tomorrow at noon. We do get some data tomorrow too. We're starting to get some data tomorrow. Retail sales, I think. I didn't check the calendar. Sorry. All right. See you tomorrow. Have a great night. Be careful.